Good morning, good evening, good whatever time it is you are listening to this. I hope you're having a good one. I'm going to be going over the datasets, earnings, and the SPY for the week of March 24th, 2025. And with that said, we're going to jump straight into the data. Now, we have a really busy week, so yeah, let's get right into it. So Monday, we have the PMI data. Um, I don't know where it's going to really lean. I'm expecting the PMI to come downward as everything's kind of cooling off really rapidly in the market. Like a lot of these data sets are suddenly coming in extremely cool, and we've been hearing like consumer sentiment and everything has just been really low. So assuming I'm gonna assume the PMI is very likely going to be coming in close to that forecast. Um, Overall, I'm not really looking forward to Monday too much. The big data sets are really later in the week. Tuesday, we have the building permits at 8 a.m. We also have some other little data sets. I don't pay attention to these ones. We have Fed member Williams speaking at 9:05, so slightly before market open. So whatever he says will very likely help sway the market on the open. Uh, We have the consumer confidence and new home sales at 10 a.m. Now, the consumer confidence is super important. Um, the consensus is expecting a weakened consumer right now. So just keep that in mind. Everybody's been talking about consumers being weakened right now, so very likely we're going to see this come in lower. Um, I don't know how the market's going to react to that, but I do know that um, that's up that's going to be a bad thing. Now, when I say bad, that doesn't exactly mean that the market's going to like drop or anything. Sometimes bad news is really good for the market. Uh, this one, I'm not sure exactly how the market is going to react to slowing consumers. Slowing consumers usually uh, leads into other issues like the labor market, where I talked about this last week, um, where the labor market has been really struggling, and we've been seeing that all throughout 2024. We've been seeing the jobless claims moving up. We've been seeing the unemployment moving up. We've been seeing sales uh, just pulling downward. We've been seeing consumers weakening across the board. So um, with the new reports and everything, basically saying that consumers have stopped purchasing at certain prices. Um, this one's going to be a really big data set this week, more than I think a lot of people are going to assume that it will be. So that's at 10 a.m. on Tuesday. Expect a big move from that. I don't know if it's going to dump the market or not. Um, I'm going to assume that since this will pull the yields downward, since that's a very cool data set, um, the market would very likely rally from that because that's generally how that works. But the data has been a little weird lately. The yields have not been reacting, I don't want to say properly because obviously they're reacting how they're reacting. Um, they're not reacting in the standard fashion that they've been reacting in over the last few years now. I mean, what's standard to us, right? So, um, just keep that in mind. That's going to be a really big one. Uh, Now we also have the 2-year Treasury auction that day at 1 p.m. Very likely we're going to see that pull down to probably about 3.85% give or take. So very likely yields are coming down, which for the market that's generally a bullish thing. That leads to rate cuts, etc., etc. Let's go into Wednesday. Enough about Tuesday. So Wednesday we have Fed's Kash I always say the name wrong. We have Fed's Kashkari speaking at 10 a.m. Now he usually will really dig into the details and not be afraid to be hawkish. So just keep that in mind. I don't really expect a whole lot, but if any member of the Fed's gonna say something to pull some weight to the market, it's usually going to be him or Powell. So uh, just keep that in mind. Now we also have the 5-year note auction on Wednesday, which again, I'm assuming the yields are going to be pulled down. That's very likely going to be pulled down closer to the 4% to 3.97-ish, give or take. Now Thursday, this is the really big day this week. Okay, now the reason why it's the really big day is because since we got the last GDP reading, that came in really cool. And we had the FOMC last week that basically said to start projecting that we're going to be seeing a cooler GDP for a while. Um, Market's going to really be leaning on this being basically a lower than the forecast or at the forecast rate. Um, the price index, GDP. Sorry, I'm just reading this for a second. Yeah, it's very likely we're going to see this coming very close to forecast, or like I said, very likely under or at the forecast. And that's a cool data set, so very likely again, the market would probably rally, but GDP works a little differently in terms of how that data set works. So GDP coming down would very likely cause quite a lot of fear in the market. Um, we're going to be hedged for Thursday, but yeah, we're going to set some stuff up at the end of Wednesday to prepare for, that PCE, GDP, um, the jobless claims, all those pretty big data sets. There's a lot of weight on these data sets right now, um, and we really just need to start preparing for those a little better, I think. And we also have the 7-year note auction that day, which again I'm assuming that the yields are going to be pulling downward. Now for Friday, we have the core PCE price index. We also have personal spending, and then, right, no, yeah, so we have personal spending, the core PCE price index data. That's at 8:30. And then at 10 a.m., we have the Michigan inflation expectations and consumer expectations. So um, it could be a big data set. Usually it's not too big, but this one could have decent weight this week just because of kind of what was said by Powell last week in last FOMC. Now at 11:30 we have the Atlanta Fed GDP. I don't really expect too much out of that. It's kind of a whatever data set for me. And then at 12:15 we have Fed Chair Barr speaking. Uh, he can kind of shake things up a little bit since that's going to be, essentially the last data set of the week before, we move into the weekend. So he might say something that could push the market up or down. So we'll go over that once that time comes. Now pulling up the earnings, and let me swap the camera really quick. Now here are the earnings this week, and I'm not going to be playing any of them. I'm not tracking any of these, so just keep that in mind. We have Lunar and Oklo on Monday. Now Lunar's in the pre-market, Oklo is in the after hours. We have Rumble in the open on Tuesday, and then we have GameStop in the after hours on Tuesday. Wednesday, nothing important really in the open, nothing in the close. And then Wednesday, basically, we have uh, Lululemon for the after hours. Again, I'm not going to be playing any of these. They're really not anything I track too much. I do track Lulu, but just because of the market cap, not so much as something I play. But yeah, with that said, let's go ahead and move on to the next. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. As always, we're going to start out talking about the moving averages, and as always, I'm also going to preface this by calling MAWs. That means the 5-day moving average. So if I say like the 5 MAW, that's the 5-day moving average, the 10 MAW, 10-day moving average, etc., etc. So just keep that in mind. Eventually I'll not have to say moving average every video so that people will understand. Um, so currently the 5 mile is 563.60 and the market closed at 563.98. So very likely that's going to be opening almost exactly where it is right now. Um, that's we essentially closed right on the 5 mile level. We have the 10 mile at 559.92. So we finally have the 10 or the 5 mile pulling above the 10 mile. That's, a bullish signal for the short term. We have the 20 mile at 571.96. So that's been pulling down significantly. It's not below that 200 mile yet, but it is heading there, and it's very likely going to um, at least hit the level or cross into it very slightly before we reach over it. We have the 200 mile at 569.75. Again, this is just going to continue to slightly pull upward. It's starting to slow down a little bit, which is, that's something that's good. We want to see that so that we can, easily cross that level. Now we have the upper Bollinger at 640, and then we have the lower Bollinger at 544.24. I know on my screen it might show a little differently. That's just because Bollinger tracks a little differently than the moving averages. So it's tracking the overnight price right now, where the moving averages won't until the open. So just keep that in mind when my notes might say something slightly different than what you're saying. Now the ADL, and again I'll just cover this one because not everyone is familiar with how the ADL works, and I fully understand that. No, what the ADL is covering is essentially the money flow. So you could kind of look at it as like a bank account. If it's moving upward, then funds are being pushed into it at, a rate, better than the average. If the money flow is moving downward, then money is being withdrawn from the bank account. So if the ADL is moving upward, it's suggesting that people are putting funds into the SPY. If it's moving downward, then that suggests people are pulling funds out of the SPY. So as you can kind of see, when we had that major sell-off, that's when people started, withdrawing funds from the SPY. Now, the thing about this sell-off and the thing about the ADL on this sell-off is I generally say this tool is like the lie detector because it likes to show divergences between what the market's saying and what's actually going on. Um, this sell-off looks massive. I mean, it's considered a correction. It's a whole beyond 10%, essentially. This doesn't look like a correction. This looks like a standard everyday in the ADL. In fact, this looks more like a correction than that does. Let's go back to, yeah, August of 2024. This looks like more of a correction than the correction we had. Um, so I don't know what to think about that yet. I do think that's kind of a bullish signal because generally you would assume if the price is being pulled downward significantly that funds would be heavily withdrawing from the fund. We're not seeing that. We're seeing chop. We're seeing some days it moving up actually, some days moving down, up, down, up, down, up, down. And it's been staying within kind of a channel. So if you were to draw two lines, you know, up above and below right here, you'd see a little channel taking shape. Now, what's bullish for me is that this kind of looks like a cup and it kind of looks like it's starting to close, which if that's true, then that's going to mean that the price of SPY is going to be moving up. So just keep that in mind when we're going over the ADL. Think of it like a bank account. You want it to go up if you're expecting the price to go up. Now, going over the hourly chart. Sorry, I just need to pull this up really quick. And I actually want to show this on the 4-hour chart because it's kind of hard to see, and we actually might have to see this on daily chart. So we have this large inverse cup, and the bottom of this cup Technically hasn't hit all the way to that support level. Um, we would assume that this cup would pull down all the way to that 536. So far it hasn't. It doesn't mean that it won't. It still can. Like this can still form into a really nice leg down. But so far we're not seeing this correction moving too much deeper yet. Uh, the inverse cup that we do have here, uh, seeing how this is so far a bottom, and we have to consider this as a bottom right now because we haven't pulled under it. So seeing how this is a bottom, uh, this cup has closed on the bottom side, and if this is a handle on this cup, then we're going to anticipate that it's going to, continue heading upward more to pull more support and then head down, or to complete the structure out. So if we were to actually visualize this and ignore the boxes right now, just focus on the actual structure here for a moment, but we'd want to see essentially like an inverse cup forming right there, or eventually something, up here and pulling downward. And that would be that larger inverse cup. Now, there's really nothing special at this 548 that I'm seeing over on the other side here. Uh, the only 548 area is kind of this liquidity range right here. So if that's going to be the bottom, that's kind of a weird bottom, but it is what it is, I guess. Sorry, I'm just kind of rambling as I'm observing things. But if we're expecting a bear structure, then um you should want this to pull upward regardless. We should, if you're bearish on this, then you're gonna want this to pull basically back up to the 600 range and then reject downward and then form that liquidity all the way down to that 536, which is that orange line right there. That's that big bottom of that larger inverse cup if we do head there. Now, I don't think we're going to head there, unfortunately. I do see a lot of bullish structure. So heading into the 1 hour chart, and you're going to see these squares on the screen. I apologize, I will delete them eventually, but I want to show this liquidity level right here. Now, these are liquidity levels, okay? Now, this purple box right here was the whole President Trump rally when, President Trump got elected. I did not want that line to move. When President Trump got elected, all the way, holding office until uh, the correction started, a few weeks ago. We're finally pulling out that correction, and we know that because we pulled out of the rally. Um, and because we pulled out of the rally, that means we entered a new liquidity range. Now, the bottom of this liquidity range so far has been hit, and it's been broken out of. The reason why it's been broken out of, because if we just extend this liquidity range back over here, that means there's pretty much nothing but upward room. Um, assuming that since we're back in this liquidity range, we will be building the liquidity back towards the top of that area. That's just kind of how liquidity ranges work. As you can see, we started pulling down in this one, and we pulled up, and now we're starting to break that level. Um, and we're also starting to see bullish structures while breaking back into this level, which is, you know, kind of what you want to say as a bull. Um, this was a really huge load zone. I definitely told people to load up during this time. I even mentioned to be buying like leaps and stuff. So I do hope people are taking advantage of that. Uh, with that said, though, I do want to draw a couple structures out because we do have this really nice inverse head and shoulders, and I know people are going to say, "Oh, that's not an inverse head and shoulders. That doesn't look like one." It's about the liquidity. So if you were to kind of like, how do I explain this? If these were all Lego pieces and you were kind of to just like smash them together, these would look like big blocks. Okay, and this block right here for this left shoulder would be enough liquidity to, give us the head, and then the head right there would build into the right shoulder. Now, in this right shoulder, you see how there's larger spaces in the gaps? It doesn't mean that this doesn't have that same liquidity right here. It just this was more choppy. This is more expanded. There can be plenty of reasons for that. It could be the algorithm. It could be just increased buyers, and we see that volume, on the bottom there. We see the buyers increasing. Um, so with that said, I do see an inverse head and shoulders there. I do see a micro cup right here. I'm going to draw that way better. Hold on. I see a micro cup right here. And assuming, we basically fill this cup out because the overnight price is at the top of this cup. The top of that cup is at 568.81. The overnight price is at 568.13. So that's very, very, very likely going to hit. And what I'm expecting is a bear structure in this area to pull downward and give us a handle on this cup to pull us back into this liquidity zone just a little bit. Not a whole lot, but very likely to probably test the 5 mile again. And just to be clear, that 5 mile level is going to be around the 563 70 area. Um, so moving that handle, let's try to get that 563 range. It's going to be basically in there, give or take. From that handle, we should see a bull structure building in there. And then, we can start forming the breakout upward. Uh, so let me just kind of highlight that. So I'm going to color these so that you can kind of visually see it. This is all a bull structure, but the selling, should be blue. I'm just going to turn this back yellow because it looks better. But essentially, inverse or a cup and handle should form here. Should pull us back in that liquidity range. And what I'm looking at for a short-term top to this area is we have a couple different tops that I'm looking at here. The first one is right here, which is at the 572. Hold on, I have it written down. 572.17. Okay, so the 572 range right there. Very likely we're going to see that handle build downward, break up into that 572 range. Now the next upward gap here is at that 575 79 range. So this breakout can pull upward to the 572 or it can pull all the way up to that 575. Okay, so just assume that this push upward is going to be pretty decent. Okay, from that area, and again, this is just assuming both kind of the bullish and bearish I can't talk bearish thesis because bears do want some liquidity upward. Um, Doing a correction, just going straight down, generally isn't the way to do it. So very likely we are going to see that upward, some of that upward momentum. And let me go ahead and delete these because I will show kind of the next structure that I'm looking forward to. Assuming this plays out, and I'll show kind of the opposite direction as well. But assuming that does play out, right? This is going to create a much larger inverse head and shoulders where this entire correction becomes a head. This becomes a left shoulder. And then this new liquidity that's being formed here and built in this area is going to be another right shoulder. And that could be the liquidity to pull all the way back upward to the top of that selling channel and to technically potentially all-time highs again if we break out of the selling channel and form a new major buying channel. So that's kind of what I'm looking forward to kind of in both the bullish and bearish scenario right now. Is that we should see this pull upward a bit. Now, if we don't, if we see this pull downward and just fully reject, um, we're looking for the rejection within this handle. And while bulls would look for this to head back upward, you'd look for this handle to turn into an inverse cup right here. So for this structure to turn into like an inverse cup, a head and shoulders, something in essentially this area that's going to start breaking down and pulling you down all the way from the top of that cup to, that lower liquidity gap, which was at that 536. No, I don't want to delete all. I just want to delete that one. And I'll show this kind of on a larger time frame so that you see that. So that's what that would kind of look like. And that would give us that major inverse cup, where we could build a large handle at the very bottom of this, build a breakout, and then start heading upward. With that said, though, I won't keep ranting, but that's kind of the two scenarios I'm looking at right now. I do think we are going to see upward kind of regardless. And I haven't explained this in video format, but um, bears sometimes want upward movement. Sometimes it's in their best interest to see that upward movement because they could have a much better uh, form of liquidity built here. And let me just kind of show example. But why would you target just this yellow range when you could target this entire purple range for, technically a sell-off? Um, and that's exactly the scenario right now is why would you continue targeting this yellow liquidity range? We've already been there for, 2 weeks now. Um, can we stay here for another, week, 2 weeks? Sure. But um, I'm just not seeing it right now. I'm seeing the buyers stepping in. I'm seeing the buying stepping up. Very likely we're going to start heading upward. If the bears do want to build some form of structure, very likely it's going to be towards the top of this purple box or top of the selling channel, where then we'll start seeing like a major bearish selling structure, and then we can, do the whole next leg downward into um, heading down to the bottom of this large inverse cup essentially. So with that said, I think I want to go ahead and end the video here, but it's going to be a very busy week. We have a lot of really important data sets, as well as some really important market movement. So this week's essentially going to be like a bounce or break type of week where we're either going to bounce out of that chop zone and start heading upward, or we're going to start rejecting and heading much further downward towards that one gap that I mentioned. So with that said, I hope everyone has a great day, great night, trade safe, and with that said, yeah, I'm gonna go ahead and end the video here. Take care.